Foreign reserves gained $620 million from remittances. Forex scarcity cripples local airlines, spike airfares. Federal government commences partial payment of stipends for 774,000 jobs. Oil slips as rising infections spark demand concerns, plus dividend of demutualization of the Nigerian stock exchange and happenings therein is the focus on our discussion segment of the program. This is Business Express reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. The federal government has commenced partial payment of the 20,000 naira monthly stipend to 774,000 beneficiaries of the Special Public Works Program. The Minister of State, Labour and Employment, Festus Keyamo, disclosed this in a statement in Abuja on Sunday. The workers had grumbled about the delayed payment of their stipends, which the government attributed to the mismatch of bank verification numbers and other details supplied by the beneficiaries. But given an update on the payment issue on his Twitter handle, Keyamo said the bank involved has verified accounts for payment, while the National Directorate of Employment has commenced payment into accounts with the bank. The minister said the government was waiting for the other financial institutions to clean up the anomalies. Now, after more than 40 years, Nigeria has reactivated the transportation of goods between the northern and southern parts of the country by rail. Correspondent reports that the flag-off by the Minister of Transportation, Chubike Rotimi Amechi, signals the commencement of freight services at the Warri-Itakpe standard gauge rail line.
With this flag off, this now marks the opening of the rail line for cargo and goods movement in Nigeria. And with these 16 wagons of 96 gas pipes taking off from Warri in Delta State down to Itakpe in Kogi State, it will take just about 6 hours. Compare the time and the money saved when this is being moved by road. Truck movement will be minimized on the highways, as this particular movement of 96 gas pipes by 16 wagons is equal to about 32 trailers off the roads.
The traders in Nigeria will no longer have challenge of issue of delayed.
It's going to boost the economy of this place.
You need to cooperate with the federal government. You need to cooperate even with the oil companies.
And at the same time, we are moving water pipes on this line on the narrow gauge from Eputemetal Junction to Zaria. And we have an offer about 1.8 million metric tons from flour mill, which we are working on.
The Itakpe-Warri rail line linking 3 states of Kogi, Edo and Delta State was originally designed for the transportation of iron ore, but redesigned to provide passenger service.
After gaining $620 million from diaspora remittances in 2 weeks, the foreign exchange reserves jumped to $35.026 billion. Data from the Central Bank of Nigeria show the accretion is the highest in over a month and has been attributed to a rise in remittance inflows following incentives introduced by the Apex Bank for dollars received in Nigeria under the Naira for dollar policy. The rise in forex reserve was also traced to steady high global liquidity and fund flow into the economy. The flow is expected to witness a relatively higher growth growth for Nigeria after the recent exit from recession. CBN Governor Godwin Emefiele said the Naira for dollar scheme gives 5 Naira rebate for every $1 sent by Nigerians in diaspora to the country. The money is paid directly to the account of the beneficiaries following receipt of the remittance inflows. The value of transactions via digital payment platforms, Nigeria Interbank Settlement System, Instant Payment System, and point of sales terminals rose to 60.34 trillion naira in the first quarter of 2021. The two platforms recorded 87.1% growth in value of payments when compared to an aggregate of 32.25 trillion naira in the corresponding period of 2020, compared to the fourth quarter of 2020, with transactions valued at 53.61 trillion naira. This shows a 12.55% increase. March had the highest POS and instant payments in value and volume in the first quarter of 2021. Mobile phones and tablets were responsible for 78% of total transactions in 2020. Now let's take a trip to the currency market. Now joining me via telephone to discuss the happenings in the Nigerian market, stock exchange. Now, NGX Group is a stockbroker, Rotimi Faka Jejo. You're welcome to Business Express.
Good afternoon.
Okay, can you take us through the development in the markets?
The Nigerian Stock Exchange that used to be, which is Nigerian Exchange Group PLC, went through a process of demutualization over a period of almost 4-5 years. And eventually everything came to fruition, and we have Nigerian Exchange Group PLC now divided into 3 subsidiaries. And the evolution of this new position is actually what every other developed exchange have attained. And I think with the Nigerian capital markets attaining this feat as well, I think being about the second or third in Africa after Johannesburg Stock Exchange, I think it's quite a development that is going to further project us better into the investment world. And be that as it may, I think it comes with a lot of changes, it comes with a lot of development, and it comes with a lot of perspective with which investors do have of the market. For instance, before now, the Nigerian Stock Exchange used to be a not-for-profit organization. But today, that has changed. The Nigerian Exchange Group, PLC, is now a profit-oriented organization. That means instead of having daily members and ordinary members as the owners of the Nigerian Stock Exchange, as it used to be, presently, the owners of the exchange are the shareholders. And though it is still the same set of people that transmuted to the new position, but how it operates now is different from how it used to be. And secondly, we used to have a single entity before, but now we have a group CEO. We also have the Nigerian Exchange Limited, which is into trading and other floor-based activities. Then we have the Nigerian Regulations Limited, Exchange Regulations Limited, which is also into they are the one that developed the rules and regulation and also the monitoring of the market. Then we have the Nigerian Exchange Real Estate.
Let me now come in. We understand that Oscar Oyema's 10-year tenure has elapsed. What next?
Yes, it has elapsed, and he is now the CEO of the group. He used to be the CEO of Nigerian Stock Exchange, but he is now the CEO of the group. And like I said, the group is divided into Nigerian Exchange Limited, Nigerian Exchange Regulations, and also the Nigerian Exchange Real Estate.
Okay, let's look at demutualization. With demutualization in motion, we see the allocation of 2 billion ordinary shares of 50 kobo each, with a market value of 50 billion naira allotted to former institutional and individual members of the defunct NSE. What does this mean for the markets?
Well, it means a lot, because now what drives the market is going to be a higher efficiency geared toward profitability, and also a sense of competitiveness, since we have two other stock exchanges in the Nigerian domain. And more so to this, with the demutualization completed and we having shareholders, the way the exchange is being managed is quite different from what it used to be before. So the management are now subject to at least questions like every other quoted company before the shareholders at their AGM, unlike before when a few people used to be available to be able to call them to question if there is any, as the case may be. But this time around, things have changed, and I think they will operate like every other profit-oriented organization.
Does it translate for investors getting value for their investment?
Yes. Before now, the ordinary members and the daily members that used to be the owners of Nigerian Stock Exchange they don't have any return on whatever they have put in over the years. So as at that time, whatever income that came to the Nigerian Stock Exchange was always being appropriated and also added as going forward. What I mean by that is that there used to be no profit declared. So if there is excess in after deducting every other expense and whatever had to be, it is being kept in reserve. And it is that reserve that has actually given the Nigerian Stock Exchange a good valuation when it is being transmuted from a not-for-profit organization to a profit organization.
Okay, trading data indicates that the NGX group, which was listed on the NSD OTC Securities Exchange, started trading at 25 naira per share, but declined to 22 naira 67 kobo per share at the weekend. This implies a net capital depreciation of about 4.7 billion naira during the immediate trading period. What does this say?
Well, I think there is only one explanation. What determines price movement in the market is the forces of demand and supply of the shares of that company. Now, with the way it is, we investors were actually expecting a value of about 10 naira to start with when this whole process started. That is the daily members and the ordinary members. So a lot of them believe that at least they've had a good return, and knowing fully well that some of the new owners, that is those people whose shares were allotted to, had actually gone out of the market. There are daily members that have already transmuted to either sub-brokers or whatever. So those ones, they believe that they need the cash to be able to do other businesses and to augment their positions. So these are the people that are selling early. But trust me, by the time we look at the valuation of the Nigerian NGS group by the end of this year, it's going to shock. It's going to be about twice the position that we are seeing presently. Because as at that time, people will have known more about it and people will be able to value the shares as it were. But for now, I think we are having that drop in price because of some people that actually want to cash out from the shares that they are allotted to them.
Now, how far can the interplay of demand and supply ascertain the true valuation of the stocks?
Well, we know fully well that for the forces of demand and supply to come into full play, the performance of the company, that is the listed entity, has to prove itself. If there is good performance, then definitely it will endear to the hearts of many new investors and will want to take up any position that is available in the market. But if the performance is bad, then definitely investors will want to dump the shares more. So there will be more supply if performance of that particular listed entity is bad. There will be higher demand if there is expectation that the performance is going to be very good. So those are the two scenarios. But for me, looking at the way the market has been, economic forces has also been a good factor in the Nigerian scenario. Insecurity, absence of foreign portfolio investors, and not inflation rate, and a good other macroeconomic factors are actually responsible for some of the effects that we see in the prices of listed shares. But I think we've had a fair stability over time, and I believe strongly that with the way we started the year, though the market is year-to-date position of about 5-point-something percent negative, but at the same time, the market has really had a good share this year and a good share of performance, and I believe we are going to see much better when the Q1 results begin to come out.
Now, shareholders also flooded the market with the newly issued shares, forcing the shares of NGX Group to close on offer. Do you see the share price of NGX Group falling further in weeks to come?
Well, in that all, like I said earlier, the valuation we expected before is much lower than what we are seeing right now. So a lot of investors are actually opting out. That is, a lot of old shareholders who used to be daily members and ordinary members. But for me, that before the end of this week, we're going to see stability in that security, and definitely we'll see a turnaround shortly after.
Okay, what does the share capital of the exchange look like now?
The number of shares in issue is multiplied by the price ruling for the day. And I think since the market has lost about, about 15% drop in the market capitalization. So I think it's really nothing to worry about or to make investors get weary. I believe strongly that we will have a situation for a turnaround. I cannot actually place a figure on the market capitalization for the Nigerian Exchange Group for now, but it has actually dropped by about 15%.
Okay, thank you very much, Mr. Rotimi Faki Jejo, stockbroker with NGX Group.
You're welcome.
Okay. Now moving on, as countries still count their losses, no thanks to COVID-19, revenues in Nigeria dip while expenditure increase, leaving budgetary gaps both at the federal and subnational level. Tax administration in the country is also becoming more difficult. To achieve easier tax collection and administration is why the Nigerian Governors Forum brought together service providers, researchers and tax authorities from the 36 states and the FCT to Abuja with the sole aim of driving tax digitalization in the country. Lessons focus on practical, in-country and international experiences that have worked.
To optimize revenue mobilization, tax authorities must digitalize the full spectrum of their operations. Our research findings show that contact-intensive taxes are at risk. Last year, collections from contact-intensive taxes fell by over 40% across all states in the country. We think this trend will continue. It has been very tough for tax authorities to collect taxes efficiently and challenging.
The adoption of technology in revenue administration processes is crucial and a major enabler for enhanced and sustainable revenue generation in a globalized and knowledge-driven world. Therefore, revenue authorities at all levels must adopt automated processes and enhance e-solutions both in their operations and in dealing with taxpayers within their respective jurisdictions.
The consensus is for every state to scale up modern, taxpayer-friendly and technology-driven revenue administration to optimize revenue mobilization. Now, the federal government, in partnership with the African Development Bank and other stakeholders, is set to roll out a special agro-industrial processing zones program aimed at concentrating agro-processing activities in demarcated areas to boost productivity and integrate production, processing and marketing of selected commodities.
So this is something that will, transform Nigeria's agricultural productivity levels, and it aligns with the next level agenda and also with the economic sustainability plan of the president.
Now go hit 7-week high on weak dollar, lower yields. Let's see what we have more in the commodities market. Prices were lower on Monday as rising coronavirus infections in India and other countries prompted concerns that saw Brent crude going down 17 cents at $66.60 a barrel after rising 6% last week. West Texas Intermediate U.S. oil was down 10 cents at $63.03 a barrel, having gained 6.4% last week. ANZ Research said in a report on Monday that the progress of vaccination drives in the developed markets, which can be seen in road traffic levels, but resurgent case numbers have reversed the recovery in the emerging countries such as India and Brazil. ANZ Research said in a report on Monday, India reported a record rise in coronavirus infections of 273,810 on Monday, increasing overall cases to just over 15 million, making the country the second worst affected after the United States, which has reported more than 31 million infections. India's deaths from COVID-19 rose by a record 1,619 to nearly 180,000. Stock futures dipped after Dow S&P 500 closed at record highs. Let's join Ineka Oko for more on the global market.
Stocks in Asia Pacific mostly rose on Monday, though India's market lagged as the country continues to see a surge in COVID-19 infections. Mainland Chinese stocks led gains among the region's major markets, with the Shanghai Composite up 1.49% to close its trading day at 3,477.55. Elsewhere, the Nikkei 225 in Japan closed at 29,685.37, while Hong Kong's Hang Seng Index rose 0.47%. European stocks inched higher Monday morning, mirroring trading in global markets. CAC 40 of France added 0.25%, with London FTSE climbing 0.13%, while Germany DAX slipped 0.8%. U.S. stock indices were mixed in early trading after the S&P 500 and Dow Jones Industrial Average closed at record highs on Friday. The Dow slid 75 points, S&P 500 shed 0.2%, while Nasdaq 100 futures were flat. Meanwhile, African markets traded on a negative territory Monday, with South Africa's JSE Africa Top 40 declining 0.62% at 62,510.04, followed by Tunisia Tunidex, while Namibia overall index closed near flat to close its trading day at 1,402.86. That's global markets. I'm Neka Uku. It's over to you, Musa.
Well, that wraps up this edition of Business Express. Remember to keep in touch with us. Do send in your comments, observations, and suggestions. Also be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now. Hashtag is BizX. Business Express returns Tuesday at 9:30 a.m. Be safe out there. I am Musa Abubakar saying stay safe.